The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Andy Duncan, keeping you up to date with expert opinion on precious metals and the markets.
Hello and welcome to this Gold Money Podcast with me, Andy Duncan. Today I'm with Jeffrey Tucker, who is the publisher and executive editor of Laissez Faire Books. He's also the author of It's a Jetsons World, Bourbon for Breakfast, which is a brilliantly titled book, and his latest book is A Beautiful Anarchy. Good morning, Jeff.
It's really great to be here, Andy. It's wonderful to see you and talk to you.
In 2008, in the words of Doug Casey, the world economy entered what you might call the leading edge of a paper money storm, a sort of Hurricane Sandy writ large. Now, according again to Doug Casey, we're sort of in the storm's eye, and we have been for the last 4 years, with lots of paper money printing in 2008, 2009 and so on, to keep us in this eye. But we're about to enter a much deeper and much more powerful trailing edge. Now, Gold Money listeners need to survive through this storm if we're about to enter it. They need to trade through the storm, and they need to emerge at the other side with their wealth intact and able to expand their businesses through trade. So I thought I would ask Jeff, who's a great futurologist, about what he thinks the future of money is. So, Jeff, what do you think the future of money is in the short term?
It's important to think of the central bank as a kind of a wicked monopolist, sort of holding on to a failed commodity. A little bit like a medieval monopolistic mercantilist king or baron or something like that who wants to privilege one producer at the expense of all the other producers. And ultimately, I think this is an unviable strategy. It's not really going to work in a digital age with globalization and sophisticated populations and information age. The dollar monopoly is really an anachronism. I don't think it's sustainable. People are going to find other ways to work around it, and they already are.
And what ways are people currently working around it with?
Well, for one thing, it doesn't take you too long to be in business when you begin to realize just how prevalent barter is. And I'm not talking about, trading your cow for eggs or something like that. I'm talking about very highly sophisticated sort of labor bartering tactics. I mean, people are trying to find ways to exchange with each other without trading cash. I mean, mainly because of the tax state and because of the heavy interventions. People would rather sort of keep things, on a barter arrangement because trading in a monetary form is highly costly. It's a very interesting thing that we've seen the rise of so much use of barter, which is rather inefficient in a way, but digital age is possible to manage this pretty well. And this is now a common in business. People look for they find ways to do quid pro quos rather than actually trading money, so that's a huge workaround by itself. And we've also seen tremendous innovation in the areas of currency markets. Most places in the world, you use whatever currency you want to use. In the U.S., of course, there's this very restrictive type monopoly on the dollar. But I've been to places now, at least on small scales, that silver and gold are traded just as regular currencies. I mean, people would rather have these things, and they're making progress towards this end. We would have already seen the advent of a global system of electronic gold trading if that had been allowed to persist. But in light of all the restrictions and things, we're starting to see things like Bitcoin really take off. And, people can dismiss some of these innovations, but, it's important to remember that a lot of the products we use right now every day, once began as exotic innovations, like the cell phone, like the tablet computer. I mean, we have a long way to go in currency innovation, and we're just at its infancy, but we're seeing the dynamism and entrepreneurship starting to take place in the world of finance. And it's only going to get more sophisticated as time goes on.
If you read Mega and Mises, of course, they say that money originally arose from barter anyway. People bartered for something that was very valuable, such as little nuggets of gold.
Yeah.
And then those nuggets of gold eventually became a medium of exchange. But ever since 1971, we've had the money system being based on paper, which can be produced sort of infinitely digitally by the central banks. So do you see a place in the future for things like gold and silver, or do you think that we will be going more into this kind of Bitcoin age, this digital cryptographic age?
So I don't think these are exclusive of each other. I think we're going to see a long period of very intense currency competition, where some sectors use some things and other sectors use other things. I mean, right now, we're getting to this stage where more and more private businesses are more or less issuing their own kind of currencies in a way where you you get discount rights if you shop and, to a greater extent at, even my local Subway shop, if I buy 5 Subway sandwiches, they give me 1 free. And so you carry these things around like little cards. Now, this sounds like a petty nothing. Actually, it could be the basis of a monetary system of the future where these things are traded, these buying rights are traded, and we have a growth in currency competition. I mean, these are forms of currency in a way. There's going to be a blurry lines in the future between what actually is and isn't money. And I don't think we should have any expectation to see one money prevail over a long period of time. I mean, we live in very strange times, a heavily interventionist state. In a free market, I think you would tend to see one single currency dominate. And truly, and then, for hundreds of years, it was gold. It was a global currency unit, regardless of what it was called at the national level. It was all rooted in gold. But, the government destroyed that system. So I think we're going to be going through a period of experimentation and entrepreneurship. And there's going to be things emerge that none of us really entirely expect. Andy, I would like to say something about, the prehistory of what got us into this current crisis. People imagine that it all began in 2008. It didn't actually. I mean, to some extent, it began 100 years ago, but more immediately, it began after 9/11. That was the first big burst of modern U.S. use of the printing press to kind of bolster national pride, in light of the terrorist attacks. I mean, this is what gave rise to the boom time economy of the 2000s, which, if you look back at it, it seems inevitable that the whole thing would end and bust. So, the government's been busily destroying the currency now for a very long time.
Well, if you're right, then that's certainly been a currency destruction in the last 10 years. After the first kind of currency destruction from 1971 onwards, we ended up with Volcker in the early 80s with extremely high interest rates. Do you think the American government is capable of bringing in a Volcker and doing that again, or is the dollar really going to decline now into a hyperinflation?
Yeah, I'm glad you asked this question because, I think a lot of people have missed this. There's been a fundamental change in the ethos of policymakers and the way they conduct their business between the late 1970s or early 1980s and the current time. Back in those days, first of all, the Carter administration was very much a reformist-style government. They deregulated trucking, deregulated energy, deregulated lots of things, and then appointed Paul Volcker, who was, very much of a kind of an old-fashioned monetarist. And when the recession hit and very high interest rates, the Reagan administration was not inclined at all to want to try to use Keynesian-style policy to turn the cycle around. There was a prevailing sense at the time that, recessions just have to kind of run their course, and then we get on the road to recovery. That sense of laissez-faire, for lack of a better term here, but that sense of letting the recession run its course has now completely been vanquished, And there was an opportunity in the early 2000s for the Fed to adopt that same policy, and they didn't adopt that policy. And now it's just one of the more bizarre things. After 2008, when the recession hit, there was absolutely no thought given at all to this idea that we just need to kind of let the system liquidate itself and get on a sound basis going forward. So no, I don't see any impulse towards anything like a liquidationist mentality at all. I mean, even in the debates in the most recent presidential election, this subject was never even broached. People always imagine that you can use the state to fight recession, but of course the results have been exactly the opposite. We're coming up here, in the 5th year of really an egregious stagnation. And they're really out of policy options. It's not clear to me how much power the Fed has left to generate even a hyperinflation. So long as the banking system is broken, it's really unclear what options are even left for these people. And yet I know they will not pursue a liquidationist strategy because they're afraid that will bring down the financial system. I don't know if that's correct, but that's what they fear. So what you essentially have is the looting of productive economies all over the world, especially in the U.S., on behalf of this overinflated financial banking system, which the Fed wants to protect above all else. That's its policy priority. No matter what Bernanke says, it's not about curing the recession. It's about saving his friends from the cold waters of competition.
But if they don't allow this liquidation to happen, then the forces of nature will gang up and surround the system anyway and bring it down. Do you think in that case that the authorities may be very hard on these new money systems which are trying to develop around the edges?
Yeah, and this is where I think we can learn something from the way Bitcoin has been formulated. This currency did not come about in what we would call a free market. It comes about in a highly controlled, highly regulated market, and it has built-in safeguards against that kind of government intrusion. So, in the early days of the internet, many monetary entrepreneurs were rather naive, thinking, well, we'll just use the internet to make a new currency and it'll just be fantastic and everybody will love it. Well, everybody didn't love it. But now the monetary entrepreneurs have learned their lessons. They're building in safeguards. You can't get to many sites where you can buy and sell things except by using IP scrambling software like Tor, for example. So the new innovations in market finance are taking account and anticipating that kind of government crackdown. Andy, it's really important for when people, when they look at the world, to understand something extremely important. That is the biggest long-running trend in the whole history of the world, which is that markets always outrun the ability of states to control them. We're always ahead. It's like a race, between power and market is always one step ahead. And if that weren't true, civilization would have collapsed a long time ago. So this is why I'm not entirely pessimistic about it. I mean, the market innovations are amazing, and we're way ahead of the state, at every level right now, and we will continue to be. This is why we continue to see progress, and I think we'll continue to see progress. People always underestimate the power of global communication networks. The most valuable commodity there is information and exchange of ideas. That has never been more easy than it is today. So we're seeing some of the effects of this. In the old days, people used to move to the city so they could learn from others and talk to others. Well, in the age of the internet, we've all moved to the city, and this is the main source of entrepreneurship and economic growth in our time, is the global communication networks and our ability to talk to each other and everyone else in the world's ability to talk to each other. This is the main driving force for economic progress.
I think it's amazing that I'm looking at a high-definition video of you in Alabama, looking at your fantastic bow tie today, and we're just doing this over a kind of internet network thrown up. It's absolutely fantastic. Now, if we look at the history of somewhere like China, you see the rise of empire, then the creation of paper monies, and then that leads to a collapse. Then the Chinese state collapses, there's then hundreds of little Chinas, and then you get massive innovation for the next couple of hundred years until the state rises again, forms the next Chinese empire. You've written about some companies like Square Up and Lending Club and Dwala. Do you see these organizations as the kind of seeds, the kind of root of the next burst of growth in the future?
Yeah, and people can look at these services and go, oh, well, that really doesn't amount to anything because it's not sophisticated, it's not widespread yet. Well, okay, fine, but everything has to start from somewhere, and this is where market innovations begin. They began in fits and starts for using that appeal to just a tiny sector of the community, and then it's innovated until it becomes radically democratized. So yeah, I see things like the Lending Club. And there are many, many similar services like that as an alternative to the banking system, actually. That's really what these things amount to. And things like Foursquare and TradeUp and these sort of things are alternative systems of payment. And, this is the thing. We've seen the biggest migration in the history of the world in the last 10 years. And it's been a migration of people from living in the physical world only to living in the digital world primarily. And it wouldn't surprise me at all to see that all of our economic affairs are going to migrate with that over the coming time. And markets will not be stopped by government's attempts to control them. They will not be stopped. I mean, it's embarrassing to me when I look at a guy like Bernanke up there talking about how in control he is of everything. He knows otherwise. I mean, in his heart, he knows that that's not true. They're no longer in control. And they're going to continue to lose control in the future. You talk about the rise of secessionism. Yeah, I mean, that's going on all over the place. That doesn't mean necessarily that the nation states are going to break up in fact, but the nation states are breaking up in a different way, in the sense that we're forming these global communities of economic and financial interest and just communities of interest that transcend the nation states. So we're seeing a de facto secessionism that's far more radical than anything we ever saw in the 19th century or in 1989 and 1990 when the Soviet Union broke up.
It goes down to the level of the individual, doesn't it? So could you tell us a bit more about Lending Club? Because that's based on individuals, isn't it?
Yeah, it was a funny thing during the presidential debates. Romney said, well, I think it was the other guy, Obama said, well, we have to have regulation of the financial system. And Romney said, well, I completely agree. You can't have people, setting up banks in their garage and lending to each other. Well, actually, that's in fact what's going on. And nobody asked Romney's permission to do it either. So
how dare they not?
Yeah. So these lending clubs, they're just people who have money to lend and people who want to borrow money, finding that it's in their economic interest to trade. And if you hit these things right, you can make a really nice return, far more so than the banking system is offering. And, Andy, what does the central bank expect? You drive the world to a zero interest rate policy to the point that nobody can make a dime by lending money. And it's pointless to save anymore through the official channels. Of course, unofficial market innovations are going to come about. So things like these lending clubs are going crazy. They're booming, and they're going to get ever more sophisticated. They've already been banned in some places, of course, but they're not banned here. But if they do ban them, there'll be other forms. There'll be always there's no stopping it. The informal sector of economic life is already, at least in terms of people's working lives, probably as large or even larger than the formal sector. The state only manages the formal sector. It's the markets that's driving the informal sector, and that's where people are gradually migrating a little bit at a time, a little bit at a time. People will not sit by and let the governments of the world destroy civilization. People are going to find ways around it and are finding ways around it, and the state is simply not going to keep up. And that, by the way, is one of the reasons that the digital sector is so innovative. It's because there's relatively less regulation over it. And the reason there's less regulation is that the government hasn't gotten around to it. They will and they want to, but they're not there yet. Meanwhile, global communication has been unleashed. Markets are more globalized and communicative than they've ever been before. And these little petty nation-state anachronisms called politicians and bureaucrats are really going to be left in the dust. Yeah, they're going to destroy a lot of things in the meantime, but they can't stop the market.
One of the ideas that you've been putting out is this thing called the speakeasy economy, which I found really interesting. Now, I know you Austrian economists dislike being nailed down to timeframes, but when will we know? What will be the tipping point where we know that we've moved from a central bank-controlled money system to a speakeasy economy money system?
It happens when the average person becomes conscious of options that are easy and advantageous to him personally. I like to spend some weekends just kind of going around shopping in technology stores and seeing what's available on the shelves. And I'm always surprised by something. 6 months ago or a year ago, I'll read about, in some far-flung geek publication, some new product that's coming out. And then 6 months, a year later, suddenly you find it on the shelves. It's always surprising to me because I think, wow, I didn't know you could just go and buy a 3D television and hang it on your wall. I didn't know this. I didn't know that Google made a little tablet reader. I didn't know that Samsung had come out with its equivalent of the iPad mini 6 months before iPad even proposed it. So there's new things happening all the time. So yeah, I think in the future we're going to find very easy ways to conduct our business that are going to just hit us in the face, and we won't have to go looking for them. That's the cool thing about entrepreneurs in the private markets. They're always looking for customers, so they'll come to you.
Do you think money based on gold will play a role in that?
Yeah, I think it probably will continue to. I've seen some very interesting little innovations in the physical world where I was in New Hampshire, I guess it was this time last year, and people were trading little index cards with slivers of gold that were measured in micro units, and people were accumulating them and spending them and buying them, and merchants were accepting them. This is going on all over the U.S. actually right now. And I have my friends in China say that it's true in China too. I
think if the Swiss gold franc project comes off, there's going to be an official Swiss money, and there'll just be tiny, tiny slivers of gold embedded in the sort of plastic heart of a coin, which will be worth at $1 or $5 or $10.
People have a lot more confidence in that sort of thing than they would do in paper money, that's for sure.
Moving on to that election that you had last week, I thought it was interesting a minute ago where you forgot whether you were talking about Obama or Romney because it doesn't really make that much difference. Right. But coming back to the short term rather than looking into the future, how do you think the next 4 years are going to go in the US under Obama?
Well, whatever happens, it won't be what they promised to do on the campaign trail. I mean, I think that's what's important to remember here. There's no relationship between what these people do in office and what they say in the campaigns. So it can be very difficult to know. I mean, it's helpful to think of political campaigns as sort of marketing festivals, but all they're really seeking to do is get into power. Not implementing particular policies. when you look back at the history of politics, you find that some U.S. politicians do very surprising things. I mean, it was Nixon who made the peace with China. It was Reagan who brought an end to the Cold War by sitting down with Gorbachev. It was, as I mentioned earlier, it was Carter who deregulated more than anybody else. It was Clinton who repealed the 55-mile-an-hour national speed limit. So, what these people say and what they do is completely unrelated. So I'm not entirely with the crowd that thinks that Obama is going to somehow bring us socialism, like overnight or something like that. I don't believe that. I'm not even entirely sure that this healthcare legislation that he's been behind is going to be implemented in exactly the way that people expect. I think we might see some better sense emerge in the Obama administration in the second term than we saw in the first term. The other thing is that it's not even clear to me or to anybody really how much power the president really has. I mean, the real government in the U.S. consists of the vast regulatory agencies that operate independent of any political control, and then also, Wall Street and large banking interests working through the Federal Reserve and the Treasury Department. I mean, that's the government. The rest of these guys, they often seem to me like just marionettes, just to put a different sort of veneer on the structure of the state. So I think, an optimistic scenario would be to say that the failure of the last 4 years is evident to absolutely everybody. So we could begin to start to see some deregulation in some sectors of economic life in the U.S. over the next 4 years. I seriously doubt that we're going to see any kind of dramatic attempts to raise taxes. I mean, just in the last few days, we've seen the markets hammered just on the prospect that people think that cap gains tax are going to go up. No president wants to preside over a crashing stock market. They're going to be afraid. They're going to be afraid to raise taxes. I don't actually anticipate that. I'm a little more optimistic in general about the Obama second term than I was on the first term, and I'm feeling some sense of relief because God knows what would happen if we had a Romney, in charge. The most dangerous thing in the world is a new president with a mandate. That's when they get crazy and reckless.
Yeah, Obama's looking very crestfallen at the moment. The glad, confident morning seems to have long gone.
Yeah, it really has. Yeah, and the other thing is that a lot of people in the U.S. really do not like this guy, which is a good thing in a way, because that sort of contrary public opinion tends to restrain the state by itself. They're very worried about the popularity. They're very worried about the bond market, about the stock market, and about the economic conditions generally. So we could start seeing some better sense emerge, I think, over the next years.
Yeah, we've seen Ben Bernanke get very concerned about stock prices, haven't we? He's kind of almost got a third leg to his mandate of looking after the value of the dollar, which is hilarious, keeping full unemployment. But now the third leg of his kind of tripartite policy is to keep the stock market up. So if you're right, then they have to avoid trying to let it go down.
Yeah, and they don't always know why stock prices are falling. But in this case, the prospect of tax increases is emerging, at least as of this morning, as the conventional wisdom that people are selling in anticipation of higher capital gains taxes. Well, that's the best way to kind of prevent that from happening, right? To just see people respond. The other thing is that, to go back to this healthcare issue, we've had many CEOs in the U.S. say that they are not going to hire new people. In fact, they're going to start firing people right now because the costs of doing business are going to go way up. Well, that is also serves as a kind of deterrent, to political recklessness. I think we're going to start seeing more of that. If there had been anything that had happened over the last 4 years that had actually succeeded in achieving what that they claim they're going to achieve, then these people might be a little more confident. But right now, the Fed is in a corner. There's no more money left for Congress to spend. Everybody's talking about the fiscal cliff. There's a lot of concern and worry out there. I think we're going to start seeing some political push to some other options. And regardless of what happens in Washington, as I say, private markets continue to innovate. There'll be no stopping that. If they do manage to further crack down on private wealth creation in the U.S., then we can expect to see a migration out of for capital start flying out of the U.S. more and more. I mean, already, people are Americans, especially wealthy Americans who have made their money through the private sector, are looking to other options, places to move, places to go. That's not ever good for any government when things like that start happening.
You're sounding quite optimistic there. It sounds like you think that the market is beginning to shrink down power in the United States.
Well, I don't think that the state is going to shrink, but what I expect to see happening is that the private sector is going to grow much more massively. People always ask the question, are you optimistic or are you pessimistic? I would answer the question this way. I'm both. Talking about the digital economy on a global basis, I'm wildly optimistic. I think we're living in amazing times, and we're going to see innovations in it just really in the next few years like you just would not believe, just same as we've seen in the last 5 years. Despite the recession, we've seen just astonishing innovations in tech and technology. But when it comes to the domestic realm and in the physical world that it manages, like in sectors like healthcare and education and some of these other things, but certainly the justice system and these things that the state exercises a kind of an iron grip over the infrastructure, I'm very pessimistic because I think they can't manage it. They're not doing a good job, and they will not do a good job. They can't reform fast enough, really, to save their old-style Keynesian management of the physical world. So I'm both an optimist and a pessimist in a way.
As a good Rothbardian should be. Now, coming on to lfb.org, I always thought of you as being synonymous with the Mises Institute, being its editor for so many years. But how's it going now at Laissez Faire Books for you?
Well, I was very pleased to have this opportunity to kind of jump in and try to make a go of this company that's been around since 1972. It used to be just, a fabulous distributor of books that, before the internet, it was the only way you could really get freedom-minded books. And then, like a lot of companies didn't quite make that transition to the age of the internet, and other companies were faster and smarter. And so Laissez Faire was sort of buried, over the course of the late 90s and 2000s. But then it was acquired by Agora Financial in 2010, and they tapped me to kind of see what I could do to revive the thing. I started working a year ago, and we're in the black. The bleeding has stopped, and we've started a new club, and I'm doing my favorite thing in the whole world, which is to publish good ideas. And so we're coming out with a new ebook every week, and we've jumped into this whole idea of global private communities and started our own private club. So you pay a kind of cover charge, and then the drinks are on the house. And that's our business model, and it's working very well for us. I always like to be on the cut. I always like to do something new. I always want to do something that's edgy and out there, something creative. That's sort of why I get up in the morning. And so Laissez Faire has been a fantastic outlet for me. So as I say, we're publishing a new book every week and radical stuff that, in the old days, nobody would have ever touched, books speculating about, how a society without the state would work. I mean, I probably have 5 or 6 books now in the club that are just about the subject of what's called, market anarchism, for example. That's really exciting to me. So I'm enjoying the challenge, the opportunity, and the daily drive to be innovative. And that's what LFB is really meant for me. It's that sort of unleashed everything I've ever wanted to do, really.
It sounds like my kind of club where you pay one price and get all the drinks you need till the end of the night. Now, I know you like books about the future, or which examine the kind of present better than books that examine the past. Is there anything exciting coming up with Laissez Faire Books, which Gold Money listeners might want to read about?
Well, I try not to announce the books until they come out that week. This past week, we came out with a new edition of Ron Paul's Case for Gold, actually. It was written in 1982, and it's funny because I reread it, and I thought, my goodness, this book, it could have been written yesterday, and Ron wrote a new foreword for us, and it's very nice, and I have an editorial preface in the book. This next week, we have a really cool book called The Concise Guide to Economics by Jim Cox that I was really impressed with because, we had this hurricane a couple of weeks ago, Sandy, and we had gigantic gas shortages all over New York and New Jersey due to these price gouging laws, that say you cannot raise your prices in an emergency more than 5 or 10%, something like that. And it created massive shortages and huge gas lines and massive human suffering. And if you're looking for an explanation of what is the relationship between price gouging laws and the reason you can't get gas, well, this book, provides that. It has little sections on every subject from price controls, antitrust laws, price gouging, money, the gold standard, and interest rates. And so it covers all of economics. And they have about 170 pages with little short essays on all these topics. I was dreaming that we could have been able to distribute this all over the bureaucracies and offices, mayor's offices in New Jersey and New York a couple of weeks ago. I don't know that it would have made any difference, but at least they would have been able to anticipate the human misery that they actually created by enforcing their idiotic laws.
I'm sure you would have been breaking some regulations if you'd done anything like that.
But we have other books coming out. I mean, I'm working with authors all of the time, and we're working now 6 months ahead. And I'm looking for the long term on this club. I'm expecting that this new model of publishing is going to generate a level of literary creativity like we haven't seen in a very, very long time. There's a lot of talent out there, Andy, as you know. It's just a matter of tapping it and channeling it and getting it distributed to the right people.
It sounds very exciting, and I'd love to speak to you about it for hours on end, but we need to wrap up now. So thank you for your time today, Jeff Tucker. Is there anything you'd like to add before we leave?
Well, just that I appreciate your show and what you're doing. I think we're the truly progressive people who are thinking about a future of freedom rather than the past of statism. So thank you for all you do.
Thanks very much. Bye-bye.
Bye-bye.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.